In this video, we're going to look at the layout of a cash budget. I'm using the example of somebody who wants to buy property for $522,000. And there you see the price that the house is advertised for. Unfortunately, that is not the price you will pay, because most governments you'll have to pay stamp duty, transfer costs, government fees. You will have to get a conveyance lawyer. So the total mortgage, the amount of money you want to borrow, is up there. Say, for example, you have a big deposit. You will now go and borrow $362,000. Say, for example, you lock it in for 3 years at 2.35%. The bank works out that that's going to be your monthly payment. Now you do your cash budget to understand if you can afford to go ahead. So I've done a cash budget for 12 years, for 12 months. So I've put my 12 months there. And then you have your revenue section. Most people only have a salary, so that's net salary after tax. I've calculated here the person receives $2,000 net every fortnight. Now remember, a fortnight is every second week. A month is more than 4 weeks. So that's why that is not 4,000, because it's 4.5 weeks on average per month. So I've calculated the net salary that the person's going to receive. This person also reckons the end of the financial year is June. He'll fill in his tax forms and reckons in August he will get $1,000 back. So what you do now is you take all your revenues and you add them up, and it gives you total revenue. So in most months, it will just be the net salary. In that month, he will receive the tax refund of $1,000. You now make a list of all your expenses and payments. And you can see here, I start off with the mortgage of the new house, and I put that amount in, which I got there from that calculation. I've listed all other possible expenses. Now you could have more or less, and I've put in there what I will pay on these expenses per month. Now you see, for example, electricity, I will pay quarterly. The same with water. I don't pay it every month. I pay these quarterly. So I put it in the months that I would pay it. The same with rates, 2 half-yearly payments. So it's not an amount every month. We put it in the month that we will pay for it. Most of the other expenses is the same throughout the month. Here you see car insurance, annual payment. He knows he does it in July, so no other amounts of cash that he's got a budget for spending in those months. You now will add up all your expenses. In other words, your list of expenses, and I have marked it here in red. So all your expenses, you will now add up, and that total you will put in your total expenses column. Your next step will now be total revenue minus total expenses. And if you look at this month of May, you will see this person will have a deficit, a negative amount. Now, say, for example, he had $500 lying in his savings account. He knows at the end of May, he will only have $290. Very important, the final balance cash at the end of the month is also the cash at the beginning of the next month. As you can see the pattern here, every month you end with one amount, that becomes the cash at the beginning of the next month. So this person has worked it out for 12 months, and he goes, oh yeah, in May I could be in trouble, in red, which means I will make a deficit. But most other months he will make a positive amount, in other words, a surplus. So he can look at this and go, okay, I got to look at seeing what I got to do in May, in July, and even in November, I will make a deficit. But overall, he will still have cash available. And that is a very good tool for you to work out your personal finance using a cash budget.